Hey, what's going on, everybody? My name is Mr. Leong, and today I'm here to discuss what's going on with the Bank of Canada and the interest rate, the key rate for borrowing. Now, the Bank of Canada is going to keep its rate on hold. They're projecting brighter economic outlooks and a solid recovery from the pandemic. Let's go take a look. Okay, so according to this article, the Bank of Canada is revising its economic outlook Wednesday, but they kept their key rate at 0.25% in a sign that it's going to keep the rate steady in order to spur continual economic growth. The interest rate is used as a way to stimulate the economy when you want businesses to borrow and invest in big purchases and borrowing. You want to keep the key rate low, but you increase it in order to contract or slow down the economy. So according to this article, it looks like they're trying to stimulate the economy and keeping the key rate at 0.25, which is actually an all-time historic low. There's also some problems in the fact that there's a third wave, a surge of COVID-19, if you will. And in certain provinces like Ontario and BC, but more so Ontario in particular, they're under a stay-at-home order. And this lockdown is going to have a significant impact on small local businesses. The COVID-19 third wave is going to threaten the pace of the recovery and growth in the jobs market, particularly highly affected sectors. Okay, so there's going to be some continuous impacts because of the third wave, and the key rate, the low key rate, is expected to try to stimulate the economy. There's also going to be tighter restrictions, and this is going to lead to job losses. But they predict that most of these job losses are going to be in part-time work and low-wage work as well. Okay, and they also project that it's going to take time for jobless Canadians and those to join the labor force and to find work, which is why the banks have actually held on to some of the savings accumulated, and they have a bigger safety net than usual. On average, Canadians have accumulated $5,800 in extra savings throughout the pandemic. Okay, Freeland also said that she wanted employment and the economy's capacity to go back to above pre-crisis levels as fast as possible. All right. And it says here that Freeland is looking for a complete recovery, and that's going to take some time, which is why the rate is going to be low. The bank's prediction for the economic growth this year is 6.5%, fueled by consumer spending, and they expect that the summer is going to be really good for businesses. But until then, there's going to be some restrictions and shutdowns until we can get more people vaccinated. The Canadian rate for vaccinating adults and individuals is quite slow per capita compared to other countries, which is having a significant impact on the pandemic recovery. The central bank expects economic growth to moderate after 3.7% next year, 3.25% the year after, and this year it's expected to grow 6.5%. And the forecast doesn't also take into effect the new full suite of the stimulus outlined in the federal budget. And there's going to be $85 billion in new spending rather than the $101 billion over the 3 years the Liberals promised in Monday's budget. So the big question is, what's going on with inflation? Because if you keep the interest rates low and there's too much spending and the economy is growing too quickly, you're going to run into some inflationary pressures. However, prices are actually considered to be quite low compared to 1 year ago. So the effect of the inflation is actually going to bring prices back to somewhat pre-pandemic levels, but it's still quite low, which is why they are able to keep the key rate low, and there's not going to be any significant inflationary pressures. Okay. Also, the CPI is a 2.2% increase in March compared to a year ago. So, in terms of pricing, it's expected to be relatively feasible and manageable in regards to the interest rate sort of externalities. However, there is significant concern about the heated housing market. Wherever you are, maybe if you're in a metropolitan area in Canada or in the US, prices have gone up significantly. And this is going to mean that, you're going to have households and families that are going to spend more than they anticipate for their homes. Okay? So what do you think about the fixed or the holding of the interest rate? So it says that the key rate is going to be held at 0.25%, and I want to know your opinion in the comments below. All right? This has been a Business Scoop. Thanks for watching, and hopefully I'll see you in some future videos. If you enjoyed watching, don't forget to like, and I'd appreciate it if you subscribe to my channel for some more business basics content. Thanks for watching, and I'll see you later. All right? Take care, and bye-bye.